All right, everybody. We are right on time today. Nobody can say that I am late. And of course, when I say it, Erwin says it's late. Erwin, apologize. Didn't get back to you last night. I will call you today. All right, everybody. Thank you for being here. Diana was first. Thank you, Diana. Rusty was here. Diana's here. Star is here. Erwin is here. Parzival is here. Herbert is here. Got the whole team here. By the way, June is here. Disclaimer. I am not a financial advisor. I have no idea what your situation is. I especially do not know what Joe's situation is. But I'm here to entertain you, break down the markets, break down individual companies. Do your due diligence. Use this for entertainment and educational purposes only. And with that being said, we got a lot to go over today, ladies and gentlemen. We got a lot to go over. Got a lot of things on my mind. Gary Vee is currently on CNBC talking about Knicks fever and NYC. And do you... No, I do not want to do what I want with your wallet. All right, let's take a quick temperature of where the markets are right now. And then we're going to get into all the individual stuff. All right. Crude is 89.91. It's up a little bit. Talks about a deal Trump needs to sign off on. We'll see what happens. The indexes were ripping. 26,850 on the Nasdaq. 75.57 on the S&P. The Dow basically flat. We are having a really good time in the markets, everybody. Now, I'm shocked. I just went speechless in my mind, everybody. ARM is at 343. I don't get it. Nebius, 230. Cloudflare, 225. Oracle, breaking over 200, everybody. And we're not going to get aggressive like Amit with the cowbell. Thank you, Mike, for the cowbell. Oracle, over 200. SanDisk, 1685. AMD, where's Lena at? Where is Lena at? AMD 525. Congratulations to AMD shareholders. Congratulations. You are not living in the shadows of NVIDIA. You are killing it right now. Congratulations. CoreWeave 109. Palantir 130. Trying to get out of this little rut that they're in. Robinhood 79.98. ServiceNow 107. Reddit getting back over 160. Look at SoFi. We're trying to make a move. 1680. We're trying to make a move on SoFi. Jake Rizzo is here, everybody. Welcome, Jake Rizzo. Zeta over 20. Zeta breaking out a little bit, everybody. Breaking out. Microsoft 424. Still one of the biggest inefficiencies in the market. Venture Global 1260. Micron can't stop, won't stop. 945. CRM 178. We're certainly going to discuss it. Fortinet 128. I mean, I have not seen this many companies rally on the same day on my watch list. Yet NVIDIA is 212. That's a little ridiculous. We got almost the whole squad rallying today. Meta's down a little bit. Amazon's down a little bit. Take it. Rocket Money 146.75. Can't be mad at that. Cannot be mad at that, everybody. What a great day. We are seeing some incredible stuff in the markets. You know what's not on the watch list? It deserves to be on it. We got to throw it on. Where's my watch list? I built too many damn things. And I don't use half this shit. We got to put Snowflake on. We got to get Snowflake on the watch list. Whoa. 36%. Man. 36%. Oh, I'm seeing something come across the board, everybody. Let me bring up the official post. This is crazy. Is this true? I mean, it's probably got to be true because it's on CNBC. I'm not seeing it on Elon's thing, but it was saying that he said they only agreed to a 6-month rental of Colossus. I will say that what he posted here is definitely bullish NVIDIA. SpaceX has almost finished writing version 1.0 of an in-house AI training stack in C that extract maps to 220,000 GB300s. I mean, say what you will about Elon. Guy doesn't know how to lose. I can tell you that. This guy is incredible. Joni, what is going on? Happy Thursday, everybody. Okay. Let's start with oil. We'll get into the good stuff. Negotiations running hot and cold. We have a fragile ceasefire framework, and there are reports out that we have reached some sort of a deal, but Trump needs to sign off on it. The deal on scenario, sanctions relief, and barrels return to the open market. Oil going lower is a disinflation tailwind. Revives Fed cuts, supports rate-sensitive equities, consumer discretionary, airlines, transport. It is a headwind for energy producers, though. You know, Mr. Rizzo, you may not be wrong. You may not be wrong, Mr. Rizzo. You may not be. All right. In a deal-off scenario, we get escalation, oil spiking, inflation reacceleration fears, the Fed boxed in, defensive and energy companies probably catch a bid, growth multiples probably compress. What I'm watching, look, XLE, Exxon, Chevron, Oxy, the airlines, Delta, United, Southwest, defensive, Lockheed, Raytheon, Northrop Grumman, the SPY. I mean, that's really what I'm watching to see what happens. We will keep our eyes open. I am going to put out a Substack tomorrow about the energy markets. And it looks like WTI is still under 90, which we like. Brent is 94.53, which we like. If we get a deal, mark my words, okay? Mark my words. We will be under 80 on oil. Mark my words. All right. Salesforce, everybody. Oh, wait, hold on. We got cut over. Oh, what the hell are they saying about this?
Continue to control the strait. Not going to hand over any of the nuclear material. And wants sanctions relief and wants billions of dollars that's frozen right now. And once that freed up, along with war reparations, they don't even seem like we're in the same universe in terms of where we are. Is there something we're missing? Are there moderates in Iran that aren't entrenched way over on that side, Amos, that we're talking to?
So I think you're right in describing the picture as this binary statements coming out of the two sides, which is why those two are not even, nobody's negotiating those issues at all. The only thing that's being negotiated right now is an MOU that will open the straits and give a time horizon where we negotiate all these tough issues of the enriched uranium that's already, right, the stockpile of enriched uranium, the future of enrichment, et cetera. And right now we're only negotiating essentially what will it cost the United States, what would we have to give Iran to open the straits, kind of an open for open. So we went into a war, we fought a war, we're now negotiating over the opening of the Strait of Hormuz, which was open before the war, in order to give us space to negotiate the other issues. Because you're right, the claims that we're making.
Yeah, I'm not interested in former advisors. Let's get on with it. Let's get on with it. All right, everybody. Salesforce reported last night along with Snowflake. Those are the two big ones. Like I said, I don't think that they're getting vibe code away. Certainly not Salesforce. Certainly not Snowflake. What's up, Big Dog Geo? Salesforce, 13% year-over-year revenue growth, everybody. $11.13 billion. Subscription and support revenue, $10.59 billion, 14% year-over-year. GAAP EPS, $2.42. I got to tell you, when I went through this report, I really think the market is wrong. I think this is a big inefficiency, and I think that we are in a situation where Salesforce can re-rate to the upside. Now, I have no idea what's going to happen, okay? I have absolutely no idea. But this is not the story of a company that is going away. This is not the numbers of a company that is being impacted by AI. Now, I do believe that the earnings call was bullshit. I didn't like it. I thought they could have done a way better job on it, okay? I thought they could have done a way better job. But here's the reality. The current remaining performance obligations were up 14% year over year, $33.6 billion. The total RPO increased 11% year over year to $67.9 billion. Let me say that again. $67.9 billion. The free cash flow, $6.6 billion, up 4%. Now, so here's the AI story with Salesforce. You ready? Agentforce and Data 360, the ARR is up over 200% year over year, $3.4 billion. Agentforce ARR, $1.2 billion. Data 360, $2.2 billion. This is not Salesforce getting vibe code away. It's just not. Anybody who believes the bears that are just spewing bullshit, it's not showing up in the numbers. Now, I don't know. Is this going to re-rate? I have no idea. I don't know if this re-rates. I really don't. But we'll see. It should. Everything is going in the right direction. Slack AWU's 350% growth. Agentic work units, 3.8 billion. Token volume, 28.6 trillion tokens processed to date. 152% quarter over quarter. Data 360 ingested 52 trillion records, up 136% year over year. I don't know how we can say these companies are being vibe coded away. I don't understand it. Maybe I'm not that smart. I don't understand it. I mean, what do all you think? Do all of you think that we are getting vibe coded away with Salesforce? And I know it's not a sexy industry. I get it, everybody. Trust me, I get it. It's not a sexy industry. It's not your chips. It's not that stuff. But it's an important name to look at. And The magic 8 ball came in, everybody. I went downstairs and got it. The magic 8 ball is here. I don't have a crystal ball, but I got a magic 8 ball. Now, there are certainly other investments to make. There's no question about that. I am looking from a perspective of a value opportunity. Salesforce just returned $27.5 billion to shareholders. They did $27.1 billion in buybacks, $365 million in dividends in Q1. They're going to keep buying back the stock. The $25 billion accelerated share repurchase program represents half of the $50 billion authorization. 103 million shares delivered up front. Final settlement expected Q3. They are going to keep buying back shares, everybody. I understand that seat-based pricing comes into it. It's about how they can monetize agents and agentic offerings to offset that. And Salesforce is doing a damn good job. They continue to increase their revenue year over year. They continue. They don't stop growing. Now, it may not be 50% growth, but this is a $100 billion market cap plus company that's doing 47 billion in revenue. They're not going to grow at 50%. They gave good guidance. I mean, the full year 27, $45.9 to $46.2 billion of revenue, 11% year over year. I got to tell you, I think that this company is so undervalued. I'm probably going to buy more. I should probably do it live. I'm probably going to buy more. Now, I'm not saying anybody else should, but I just think that there's an opportunity here. Dinesh, I can tell you that I understand how software works in enterprise because I'm the one that used to negotiate it and implement it. I've actually negotiated the Salesforce contract and implemented the Salesforce contract for an organization of 4,400 people, along with Workday, along with Microsoft, along with several other big companies just like ServiceNow. So I have intimate knowledge of how the contract works, how the RFP works, considering I wrote the RFP, I ran the RFP, I selected the consultants to do the implementation, devised the entire plan with back office from fiscal to HR for Workday, for Salesforce with our marketing team, with our development team. So yes, I understand intimately how it works on the back end. And I'm telling you, you can't get out of these contracts. You can't get out of them. Anyway, enterprise software, I think, is going to see its day. We'll see. Sure, you can build a CRM vibe coding. I'm not saying you can't. Here's the big difference. When you vibe code something, yeah, big money's afraid. I get that. That's where there's an opportunity, in my opinion. Now, for vibe coding, here's the big thing, and I'm going to address about when contracts end. Trust me, here is the big thing. You have to understand how business works. I'm not talking about a 5 or 10 person organization. When you are a large organization, there are compliance audits. There are real audits from your auditing companies. They bring in specific technology auditors. They flag how you store data. There are very specific security protocols that you have to go through. Companies need SOC 2, SOC 1. They need all these different certifications that they need to be able to produce. There is not a general counsel. There is not a chief compliance officer. There is not a CFO that is worth their weight in gold that is going to recommend using, and I'm not putting a knock on anybody, okay? But if Johnny and Timmy vibe code something in IT over a week or 2 weeks, nobody's going to let the company use that for payroll. Nobody's going to let the company use that for HR. Nobody. They'll lose their jobs. Not to mention the board will step in and say, what the hell are you idiots doing? Trust me, I lived it for over a decade. That specific role, I lived it. It's not happening. It is not happening. Now, that doesn't mean that Salesforce is going to go up by any means, but there is, oh, not yet, LOL. Okay, cool. I mean, there will always be new products. Keep that in mind. But as the vibe coders or vibe coding software, if you don't think that Salesforce, ServiceNow have bigger token budgets than you, software engineers that are better than you, and have an unlimited budget to make their product better, they're doing it. And most likely they're using different models than you're using. Now, we are going to likely see single point software get destroyed. Enterprise, probably not. Good luck getting off a Workday. Look, typical Workday implementation, 12 to 16 months. If you honestly think that you can vibe code away Workday, SAP, Oracle, Microsoft Dynamics, you're insane. You're absolutely insane. It's not happening. All right, I have a very important question. I would like everybody to do me a favor. I'm going to ask I don't like when my thing comes up with volume. I'm going to start a poll. I want two questions out of everybody. Does your company use an ERP? Oracle, Workday, SAP, Dynamics, etc. I want to know, do you guys use it? Does your company you work for use an enterprise resource planning platform? Now, small businesses probably won't, but if you're working at a large business, you are. Workday has 65%, I believe, of the Fortune 100 companies under its belt. Joe, I wonder if they're using one for HR and one for finance. Oh, this should be good. Enki, what are they going to use? Please tell me. What are they going to use? This should be good. AI. Okay. Not happening. It's simple. I can tell you, you don't know what you're talking about. I promise you, you don't know what you're talking about. All right. So 73% are saying that your company does use an ERP. Yeah. I constructed a website with AI. I'm not using it to store HR information or anything else. It's just not happening. Anyway, these companies are going to continue to grow. I will be willing to make a bet on this. And I'm also willing to bet that everybody that is trolling me saying that they're going to be vibe code away are not decision makers in their company that have any power to let a vibe coded product come in. Listen, I am giving you guys behind the scenes from somebody who lived it and breathed it and made the decisions and ran the RFPs and have intimate knowledge of the actual contracts, how they're constructed. I can tell you that the Workday RFP took us over a year to do. Over a year. We brought in Oracle, we brought in SAP, we brought in Dynamics. We even went to HCM side and brought in ADP, Paycom, and a couple other smaller companies. Promise you I know what I'm talking about this. Promise you. there is also a huge cost with moving your information out and doing another implementation. So people need to really think about, put personal feelings aside. It's the same thing about when people were trying to say that Salesforce products sucked. Well, they're not losing customers. They're still growing. The churn that they have is not net negative. So anyway, Salesforce had an incredible quarter. Obviously, it didn't go down a lot. It's kind of flatlining right now. We'll see what happens. But Agentforce, Data 360 is working. We'll see what happens. We will see what happens. Snowflake. This is the other one. Whoever's in Snowflake, congratulations. Snowflake blew earnings out. Blew earnings out, okay? Total revenue, $1.39 billion, 33% year over year. Product is 96% of their revenue. The net dollar revenue retention rate, 126%. No. All right. I'm going to answer this and go back to Snowflake. Very important question. No, it's not getting eliminated by AI. Here's why. Okay. How do I even explain this? So what they're asking is RFI is request for information, which is different than an RFP, which is request for proposal. Will not get eliminated. Maybe it gets streamlined by AI a little bit, but look, if you're making a decision, if you're a business owner or you're in the C-suite, you are not just going to let AI do an RFP for you. You're going to sit down. You're talking about hundreds of thousands or even millions of dollars a year in cost. You're going to sit down with the reps. You're going to get demos. You're going to talk to your subject matter experts. You are going to go through the whole show because it is that important of a decision to your company. That is not getting replaced by AI. It's just not. Like, you also are going to negotiate the terms. This is not getting replaced by AI by any means. And I think so many people think that everything is getting replaced to AI. It's not. Anyway. Snowflake. I got to tell you, I'm not in it. This was a great quarter. Gross margin, 71%. Non-GAAP operating income, $165 million. This was a good quarter, everybody. Now, does it keep going? I have no idea. Free cash flow, $232 million. They're on a run rate of around $940 million. I guess boomer talk is experienced adult talk. I don't know. I've worked at a $70 billion company. Been a C-level executive. I guess I don't know what I'm talking about. I don't know. Now, procurement teams will shrink. At that, I do believe. Obviously, I think that there's going to be a lot of streamlining with AI. There's a lot of benefits for AI. There are just certain things that are not going to get replaced. Rusty, thank you so much. Ask the 8-ball if I was stupid for buying BMNR this morning, please. Was Rusty stupid for buying BMNR this morning, let's say? Don't bet on it, Rusty. Don't bet on it, even though you can't see it. It said don't bet on it. Tanner's saying we are entering a new era, maybe the toppiest thing a person could ever say. Might be true, but on behalf of all retail, shut up. I don't know what era he's talking about. He needs to get on the era of getting his sleep score up is what he needs. Guys, that's not true. Trust me, if that was true, my life would have been so much easier. So much easier. Now, I will say this. If you're doing an initial RFP, this is not true. Now, if you're doing a supplemental 5 years later or 7 years later, the incumbent usually has an advantage because they have a relationship and it becomes a cost of switching. But on the initial, this comment's certainly not true. So accountants, look, accountants is one of those things I think you can get completely displaced. It's very hard to understand how we're not going to have streamlined account. I mean, TurboTax is already here, but I think that we're going to see the majority of people be able to get their accounting done with AI. I mean, think about it. You have the entire tax code. Why can't AI memorize it and be able to do your taxes perfectly? I think that that's entirely possible. I think it is entirely possible, everyone. Already done. Ink, it's not already done. Trust me, it's not already done. My taxes cannot be done by TurboTax or anything like that. I actually need a sophisticated accountant. Now, maybe in 5 or 10 years, maybe, but certainly not right now. I would never trust my taxes to AI right now. Oh, let's bring on the good old Snowflake talk. Let's see what they're saying.
Josh, of what happens in this market when you got a red hot name and you get a red hot beat.
Yeah, I think this is very good for beyond just Snowflake itself and Snowflake shareholders. I think this is good for sentiment because we've basically had a one-way trade in a lot of technology stocks that were deemed to be, for some reason or other, on the wrong side of the AI trend. And Snowflake kind of got lumped into that where they said it's too expensive and it's unclear what their exact position is going to be in this ecosystem. Everybody understands why it's a bull market for what Snowflake does, but there were questions around it because it's lumped in with all these software stocks. As a result, money comes out of the ETF. This is one of the names that gets sold. People aren't thinking twice. They're shooting first, asking questions later. And then all of a sudden they come out and they say, not only are we alive, we are doing better than ever, and we have this partnership with one of the top 3 names in AI and data centers, Amazon. And look, now it's time for you to actually think about the future for Snowflake and not lump us in with all of these other potential disruptees. I think stock by stock, you could see that happen with other names, and I think that's why it's such a healthy development for investors, whether they own the stock or not.
I mean, the market, Malcolm, is judging this one as a beneficiary of this AI boom, an enabler of these models rather than a disrupted by these models, which obviously brings me to the fact that Salesforce is not trading like this one is. Stock was red after earnings. We'll just mention it. Kramer was bullish on it this morning, said he would buy it. I think when it was like 170 something, 173, 174, 172. So stock did come off the lows. You can see the move too when Jim was talking about it on the show this morning. But nonetheless, I mean, a 30-something% move. Was the market really that offsides on what Snowflake's got going on?
Yes, it was. And I say that for 2 reasons. One, I think Snowflake is validating, to your point about Salesforce, the hypothesis that what the market was missing is that there's a difference between a consumption-based model and a per user model when it comes to software. Snowflake is a data aggregator or a data warehouse that has done the smart thing of deciding to be Switzerland and sort of sit in between all the different model providers and not necessarily pick a favorite, which we're starting to see also has some benefits for the companies that chose to go that route. So in this case, we're no longer worried about is software going to be completely disrupted by AI? We're worried about which software names are going to be disrupted by AI.
Yeah,
and
sure.
I think what Snowflake is proving is that it doesn't really matter who the winner is, whether it's Anthropic, OpenAI, or someone else to be named later. They're going to have the opportunity because everyone's chasing compute wherever they can get it. What I mean by that is the different data storage platforms that exist out there.
How many of you are in Snowflake? Is congratulations to whoever is. I mean, I don't know. This was a parabolic move. I don't know if the market was really that offsides, but it certainly feels like it right now.
There are all the different neo clouds that exist out there. Companies are sending their data to wherever they can find compute, which means then that it's kind of fragmented, and a company like a Snowflake that can bring all that together and give you access to it in one centralized place is proving that it's valid, it's going to survive the SaaS apocalypse. And I think that's why we're seeing recognition that, okay, we probably got offsides on this one. Let's pile back in. But I'll say one more thing to that. Look out for Databricks and the widely anticipated IPO that comes from that, because they also play in this same sandbox.
Yeah, and that's, as Kramer was also saying.
Real quick, everybody, there is an ETF out there that I am in. I have mentioned it before. It is BST. We can take a look at it. The BlackRock Science and Technology Trust. Why are the holdings not available from FMP? What the? All right. I'm going to bring it up on something else. Give me one sec. I want to show everybody the holdings. And when Lena gets here, I have a surprise for Lena. So this is how I am indirectly getting exposure to Anduril, Databricks, and Anthropic. Those three private placements are in the top 10 holdings for BST. You're also getting paid just over 6% on the dividend. So I don't know if you're interested in those and you can't get it on the private markets. BST is a indirect play on it. I've been in it for years. I happen to like the fund. Pays a great dividend / distribution, whatever you want to call it. The technical term is distribution for this fund. So if you're interested in Databricks, that is a way to do it.
This morning, they're coming for them, as them being Databricks. So I'll turn to you, Farmer Jim, and move from software to chips. Speaking of parabolic moves in the market that need to be addressed, we now know the SMH is up 64% since the March low. The Philadelphia Semiconductor Index, better known as the SOX, up 79% year to date. It is the best 100-day period to start a year ever. That rally, pointed out by CNBC, check out our website today, becomes the most hated in history. Okay. How do they measure that? Oliver Rennick authoring that piece for us as he watches the options market. So he sees the kind of buying that is happening. Open interest in put contracts on the VanEck Semiconductor ETF, that's the SMH, have surged the past 2 months to just under 1.7 million. That's the most ever, okay? Going back to the fund's launch in 2011. Thus, it's hated. People are worried, although remember I said yesterday on the show that, somebody had told me, a well-known investor, that they were watching this Micron move with astonishment like everybody else and saying, yeah, but I'm still buying calls.
Well, look, the put-call ratio is traditionally a contraindicator. When it goes high, that usually means there's more gains to come. I do think that as much as we're all stock pickers, right now we probably have to be parabola pickers at this point in time, meaning you have to decide where a particular name is on its parabola. Now, I get that Micron, just as an example, at 10 times forward earnings looks cheap, but I don't think this is the time that I would be picking a position in Micron. I think there are other semiconductor names that you can select. I've recently trimmed Qualcomm, but NVIDIA, if you look at that, I don't even think that's a parabola anymore. It was several years ago. Now it's just a nicely appreciating bellwether leader in the space. And
there are some too, by the way, who will take issue with your statement of you can look at Micron at 10 times and say, well, it looks cheap.
Yeah.
Not historically how
that's
memory has traded.
That's my point. I'm sorry I didn't make it clear that it's actually kind of expensive for something that has been this cyclical. NVIDIA, as it has a difference that it's more of a specialty manufacturer, far more. It's not just GPUs. Now it's CPUs. It's got the coding software on top of it. So this isn't as commoditized as something like Micron, which is highly commoditized, enjoying the rally, good for Micron. But longtime investors know that a cyclical stock like Micron will eventually give up some of these gains. Maybe there are more to come, but it's not for me. I do think that there are parabolas that you can buy and that there are parabolas that maybe are a little bit too mature at this point.
I don't know. I mean, JP Morgan's Retail Radar plays well off the CNBC story by Oliver that, yes, it may be hated by the volume of put buying, but there's still little evidence of.
All right. Here's where I am on semis, and I think I got to rewire my brain on something I'm going to talk about tonight with Amit. Maybe we need to say what can go right, not what can go wrong. And the reason I say that is maybe, just maybe, looking for the beaten up companies instead of getting on the train, maybe that costs you more money in the long run. Now, I do think the market is discounting NVIDIA. But I also think Micron can keep running. I really do think they can keep running. And I think AMD can keep running. I think that AMD is in a very good situation here. Look, the CapEx cycle is not stopping. I think we can all acknowledge that. When I look at the numbers and I go through the numbers, I think there's a very big opportunity still in semis. And this is a build out like we've never seen before. Now, I can't tell you if quantum's going to do better, if the neo clouds are going to do. I have no clue. I don't know. But I am warming up to the idea of starting a position in CoreWeave because of what can go right. And when I think about the money being spent, if we get a deal or not with Iran, does that really stop CapEx? No. Eventually we'll get a deal one way or another. I hope it's the easier way than the bloody way, but we're going to get a deal at some point. Oil will be under 70, and the Fed is likely to cut at some point. I don't think that the market is too expensive here. Stop buying SAS. I'm worried about. Don't be worried about my portfolio, please. I'm good. I'm good. Trust me, you don't know how I have things allocated. I'm good. But look, we need more chips. Chips are such a commodity right now that is in dire straits. We are only going to see new iterations and new iterations. Think about the 80s to the 90s, the 90s to the 2000s. How many iterations of x86 chips we've had? They always advance. We always have cycles up. Okay? We are likely to see AI over the next 10 years completely evolve from where it is today. Today is the worst it will ever be going forward. Tomorrow is the worst it'll be tomorrow going forward, et cetera, et cetera, et cetera. The compute that we're going to need is going to be insane. I also don't believe that we are done with the CapEx. There's nothing leading to it. So let's look at the P for AMD. Let's look at the growth rates. First, we'll look at what the street's looking for on Seeking Alpha. Then I'll do all the math. Is this a parabolic move? I don't know. 67 times earnings doesn't seem that crazy anymore. Not when you're expected to grow your EPS by 75% this year and 75% next year. And then you trade at 27 and a half times 2028. Maybe AMD's not that expensive, everybody. Maybe it's not. I mean, you have a tremendous amount of growth here. And you look at revenue is exploding. You know, I'm not going to answer that. I'm just not going to answer it. Look, AMD is a great company. I'm not going to sit here and just because I'm not in it, say it's not worth it. AMD is a great company. And I don't think it looks as expensive as people think. I also think that these numbers can get bigger. I think the projected growth for AMD can get bigger. I mean, look at the range for 2028, 13 to 28, and the consensus is 18. There can be so much more EPS growth for AMD that, you know, where have you been when AMD was under 100? I was buying NVIDIA. I picked NVIDIA over AMD. AMD has probably done better over the past couple of years, but you know what? It is what it is. Just because I picked NVIDIA doesn't mean that I'm going to sit here and slam AMD. I think AMD is a great opportunity. It wouldn't be intellectually accurate to say it's not. Rachel, thank you so much. I really appreciate it. It was a great episode. He's a super nice guy. So, no, I do got some beef. David and I are going to have to settle something. Him and I are going to have to go to Luger's together. And then we're going to have to go to Benjamin's together. And we're going to see which one's better. I stand by Benjamin's is better than Luger's. I stand by it. So we'll see. Look, I think AMD is going to do well. I also think NVIDIA is going to do well, and I think Broadcom is going to do well. I think the three of them are going to do well. I talked about SaaS at the beginning. Just rewind. Short version, I think Salesforce is fine. But holy shit. Joni, you're better than me. I had a lot of it at average share price of 368 and sold it. So let's look at Micron real quick. This doesn't look that crazy, people. Especially if you think this number's wrong. This doesn't look that crazy on a forward basis. It's trading at less than 10 times earnings next year. Benjamin's Steakhouse is on Park and 41st. Don't be hitting on Joni just because she's been holding AMD since like $5. And look, that's what I like to say. The fact that Joni has been holding AMD for a decade, that's a long-term investor. Love seeing that. Love it. Love it. Love it. Love it. Jaja, what type of food do you like? I'll send you somewhere good. Joni, you're a damn winner. Look at you. If only we could all be that lucky. Congratulations. That's incredible. Great insight. So I think the real question is, Joni, what are you buying now? What are you buying now? The people want to know. Larry, you can never be in Long Island, but you can be on Long Island. Hold on one sec. Oh, Jesus. Oh, chicken parm in Manhattan. I mean, if you can get into Carbone, that's where you go. If you can't get into Carbone, there's like a million places that you can get chicken parm. Emilio's is incredible, hard to get into. You're going to have to wait a little bit. And you can get a really good chicken parm at Carmine's is good. You can get a good chicken parm at Scarpetta. You can get good chicken parm at John's on Bleecker, Patsy's, a lot of places. Rayo's is going to be a little hard to get into. Yeah, Nick Fever is legit. Nick's Fever is legit. All right, you heard here first. We can all go home. Joni owns SoFi. We're safe. I'm expecting big things out of SoFi. Big things. Yeah, if Noto wasn't catching a plane, I would have said to him, let's go get some chicken parms. I know a spot. I mean, I'll drink coffee from almost anywhere, but I do like Starbucks. I mean, Diana, that's what happens, right? Sometimes we talk about stocks, then people get me on a tangent. Somebody's coming to New York. They want to know where they should eat. So I asked what type of food. But for everybody getting bent out of shape by NVIDIA, look, I think the NVIDIA trade is a little backwards. You look at them versus Broadcom and AMD, their margins are better across the board. Way more profitability, obviously. And on a valuation standpoint, they trade at the best value. I do have to say, I think NVIDIA is very undervalued. You know what, Diana? I need to start working out again because of how bad I eat. It's no bueno. But look, I can't control the market. All I can tell you is that when I do the research, okay, it looks like NVIDIA is being disrespected across the board. But I don't know what's going to make it change. I think the big problem is how much of the S&P it represents. I don't think the market wants it to be more than 10% of the S&P. That's just my own personal opinion. I mean, we've never seen a company. I mean, let's look at all three from a visualization. Start Broadcom. Great company. Great margins. 12.7 gross, 8.7 operating in Q1. Let's look at AMD. Not nearly as good. Okay? Not nearly as good. Now let's look at NVIDIA. I've never seen anything like this. ever, ever, ever. I have never seen anything like this. I'm in agreement, and I do think that's what needs to happen. We're going to cut over. Hold on one sec.
But Snowflake continues to be a very, very large personal holding for me. We moved out of it in the fund, Scott, because I'm in the business. I have to manage this stuff. Year to date, Snowflake is up 10%, even including today's moves. Compare that what we moved the money into, like Micron, which is up 200% year to date, or ARM, which is up 200% year to date. So for our investors, for our shareholders, that was the right thing for us to do, even though today is an absolute spectacular, well-deserved blockbuster day for Snowflake.
So a couple things. So you're not taking any profits, for example, in the Micron, given the crazy move that we've even seen since we last spoke, just as you said 2 weeks ago. Let me deal with that first, and I have another question about Snow and Databricks.
Right. Yeah. So yes, we are actively managing our portfolio, Scott. I can't give you every tick and trade, but I will say with these parabolic moves, we absolutely are making sure that we're taking down some of our exposure in names that exceed our price targets, rotating it into other names. But remember, on the All In Pod, we have this phrase, let your winners run. So a key in this business is that you got to let the best companies continue to compound. You've heard me say it on this show before, a simple heuristic for the people watching at home. Think about managing your portfolio in 3 sizes: small, medium, and large. Okay. And when things are all washed out, when everybody's despondent like they were earlier this year over the start of the Iran war, maybe you take your portfolio to a large position. When everybody gets euphoric, you may want to take your portfolio from that large position to a medium-sized position. In my parlance, I call it 3-6-9, 30%, 60%, 90%. So, of course, when we see these types of moves, we take a little off the table that we can redeploy when we see volatility in the market. That's our job.
So back to Snowflake for a minute, because you put it in the same category as Databricks, which you're an investor in, obviously, and we wait for that to go public too. To what degree is Snowflake, to use the words that Kramer used this morning, coming after Databricks? The competitive angle now, what does that mean?
Well, make no mistake about it. These companies have been competitive from day one. They're run by incredibly competitive people. They do very similar things. But at the same time, this is one of the largest TAMs the world has ever known, intelligence. Every small, medium, and large business in the world is going to consume more tokens in the future, more intelligence in the future. So there's plenty big TAM for both of them to grow very quickly for a long period of time, but they're going to battle it out. I don't think it means that one's going to win and one's going to lose. And don't count out ClickHouse, which may be the fastest growing of the bunch. Which is also, one of our shareholdings. We fundamentally believe.
Hear that, Nebbia's shareholders? ClickHouse, ClickHouse, ClickHouse.
Believe that data is the oil that runs the AI engine. And these are 3 of the most important companies in providing the data. So as more tokens are consumed, more data is consumed, and these companies are benefiting from that. And you see it in the results.
Hey, Brad, it's Josh Brown. If, let's say, a hypothetical CNBC viewer with $100,000 in cash for whatever reason, they want to put it into the market, they believe in the AI story, they believe it's secular and it's got years to go, but they're staring down the barrel of an $86 billion IPO raise in the near term, not to mention probably something close when you combine Anthropic and OpenAI, maybe even more. Can the market support that much supply of new tech stock hitting the market at the same time? What would you tell that viewer who's saying, yes, I want to invest. Yes, I understand I shouldn't time the market, but I feel like there are 3 asteroids headed for Earth, and maybe I should wait till after. How would you think about that if you were that viewer?
Yeah, Josh, great question. And I loved your earlier commentary on Snowflake. Let's just say this. today is not the day that you shove all in on the market. You know, go back to the heuristic I used, 369. And let's say you have 0 in the market today and you want to put $100,000 to work, then I would put 3, right? I would put 30% of that to work, because you have to start at some point and then you wait for your moments. Yes, we have incredible IPOs coming, starting with SpaceX, rumored on June 12th. Hopefully, I'll be back in the New York Stock Exchange with you guys. It's going to be an incredible IPO. It's going to raise about It's going to raise about $75 billion. Okay, so if Altimeter and we do want to buy the SpaceX IPO, I've got to raise that money from somewhere. So I've got to sell some other stocks in order to buy SpaceX. That's just the way it works. We don't have unlimited capital. And when Anthropic comes public in the fall, or OpenAI comes public in the fall, I'm going to have to sell something else to buy this. So your point is certainly correct. But the only thing I would say, Josh, is remember the depth of our capital markets. I mean, we're talking 100 trillion relative to $75 billion. So in the grand scheme of things, I think particularly because we're going to have early adoption, early inclusion in the index for SpaceX, I think there's going to be enough capital to do that. But the bigger risk right now is simply that we've come a long way quickly, right? We could have a 10 to 20% consolidation in the SOX or these other technology and AI markets, and that would be a run-of-the-mill consolidation. So you want to make sure that if you're watching at home, you have some cash on the sideline. So when the market comes in, the secular trend doesn't change. AI is where you want your money, but you have some more dry powder to buy those things.
So I want to unpack a lot of things that Gerstner said. And look, he brings up very good points. When these companies go public, capital has to come from somewhere to go in them. Not everybody is sitting on cash. Now, there is over $8 trillion sitting on the sideline in money markets. Does some of that flow into the market? Maybe. Maybe it does. But I think he's correct. I think people are going to sell things to buy Anthropic, SpaceX, OpenAI. And if that happens, maybe we also see a rotation. Maybe we see a rotation out of Micron and out of SanDisk, stuff that's up so much. Maybe we see a rotation out of an AMD, and maybe NVIDIA catches a bit. But I think that these companies, regardless if I think their valuation makes sense or not on SpaceX, people are going to be running to buy it. So I think we need to be ready that, look, the market can hit a rough patch. People may sell to get in on these companies. There is no reason that they wouldn't. Now, as far as letting your winners ride, if you listen to All In, it's in the theme song. Sachs has said it many times. They all live by it. I don't know that buying Micron here is a bad idea for me. I mean, I bought it at 709 and I would consider buying more. I think it's a great company that can keep going. I don't think just because something is up 200%. I mean, Gerstner said it. He bought Micron up 200%. Just because something's up 200% doesn't mean you can't make money on it. I think that's just the reality. We are going to see Josh Brown's best stocks in the market when halftime comes back. But let's look at where we are right now. Let's get everybody going. Oil's fluttering around. We're at 89.13. Snowflake is up 38%. This is incredible. 38%. ARM, 13%. Nebius, whatever you want to call it. Nibis, 9.57%. Congratulations to everybody that's on the Nebius train. Congratulations. Wasn't it funny that Tanner thought he had a lower share price than me? I thought that was funny last night. I should clip that. Oracle 203. Service meow. Running 108. SanDisk pumped. Approaching 1,700. All right. Palantir, everybody. Golf clap. 140. We broke out of the 130s. Thank the good Lord. Hood is 80. AMD 517. Reddit 160. Zeta, we're over 20. SoFi, Joni is backing it. We're going to try to get to 17. CoreWeave 107. Microsoft 4.25, baby. 4.25. I mean, I was trolling him on purpose. I really hope you guys can tell when I'm doing things on purpose just to get him going, because he's hilarious when you get him going. Micron 940, that don't suck. Salesforce can't even get over 180. What a great quarter. Altria Group. All right, NVIDIA turned green. Look at that. Disrespected. Meta and Amazon are being disrespected. I got to tell you, this is a good day in the market right now. We got to see if we're going to get a deal. You know, sometimes you got to get Tanner going. All right, I think we're going to get Brown's best stocks in the market. What are they going to be is the question. Not yet. We're not getting them yet. Okay. We all need the Iran deal. We all need it. I haven't seen anything on the Wall Street Journal or Bloomberg. Let me go back to them. Okay. U.S.-Iran agree on further truce pending sign-off. The deal is for 60-day extension of the ceasefire and negotiations to start Iran's nuclear program. Start on it. We'll see. Rico, thank you very much. Thoughts on ARM? I think ARM's overvalued. I think they're in the right sector, and it doesn't matter. My own opinion. I still haven't read it yet. All right, hold on.
Sure.
Tell me about that. What is it? What is it?
So Porterhouse is a separately managed account strategy that we employ for clients at Fidelity and at Schwab. It's not all of the client's equity exposure. It's a portion where we're trying to do what we talk about a lot here on the show, own the best stocks in the market. It is systematic. We've built this with Franklin Templeton, which is a $1.7 trillion asset manager, working with their quants to try to take this idea of owning the strongest stocks in the market and turn it from a list into an actual portfolio strategy. It's more selective than the best stocks in the market's list. Right now, I have 180 stocks on my list out of the Russell 1000. We're in a bull market. That should not come as a surprise. The Porterhouse portfolio running for clients right now is only 58 names. That will flex as the market trades well or poorly, but that's around the sweet spot for a bull market. 40 names on the low end. It's got its own built-in risk management, so we don't turn winners into losers. And I think the most important thing I could share about Porterhouse is how difficult it is for stocks to make that list. You've got to have a lot of things. We're looking at the way stocks are behaving before and after they report earnings, the 3 days before, the 3 days after. We're looking at not just the uptrend, but the slope of it. We're looking at a lot of different relative metrics when you talk about strength. Well, how strong? And how strong compared to other names? And there's a lot that goes into that to make sure that we only own the Porterhouse cut of the market. But it's been a lot of fun developing this, and clients are really into it. And I appreciate everyone that came out for the launch party It's just the beginning, but so far we're having fun.
Quick clarifying point, because when you were talking, the verbiage up there was talking about great cash flows, great earnings.
Yeah.
But I know you, with best stocks in the market, a lot of it has to do with technicals. So
Yeah.
is it both technicals and
It
fundamentals?
is. So we want to avoid, it's a great question. We don't want to buy the
I
52
only specialize in great questions.
We don't want to buy the 52-week high list. We don't, oh, that stock's up, buy it. We don't want to be in GameStop. We don't want to buy stocks that are rallying for mechanical reasons like short squeezes. We really want to make sure we're not only buying stocks that are trending higher and have strong technicals, but there's got to be a fundamental backdrop or else they can't get into the portfolio. It's been tried before. Obviously, there's a lot of people running some sort of version of this. I think what separates ours is we're not a relative strategy. In a market that's correcting, we're going to own less stocks as time goes on because we can't fill our slots with stocks that aren't going up. I think that's a really critical difference. It's not relative momentum to the rest of the market. Either these are the best stocks or they're not. We would rather hold cash in those slots waiting for new leadership to emerge.
So, right, just because it's on your best stocks in the market list doesn't mean it's going to be in
The hurdle
Porterhouse,
is
vice
higher.
versa.
The hurdle is
You
higher.
do have one today that is in both.
Yes.
Tell me.
Yes. So I wanted to talk about a name that is both in the best stocks of the market list, but also good enough for inclusion in the Porterhouse strategy. And that is Edwards Life Sciences, EW. Company's been public since 2000. They were spun out of Baxter, but they've been around since 1960. This is literally the first guy to do an artificial heart valve transplant. So Edwards is a huge player in that market. They've done these for millions of people. It's a med tech company that is now starting to break out. You see it here about 87. Pull back the chart. I want to show people what I'm talking about when I say breakout. So you see there's been a lot of congestion at this level going back to the end of October, early November. Third time is the charm. I think we take that level out. What you can see here basically is a company with an RSI at 63. That's a healthy level of momentum without being overbought. The last earnings report was absolutely an inflection point. The fundamentals are confirming what the technicals are saying. I think we're breaking out here into new space. Once again, this is a name that we own in Porterhouse. It's also on the best stocks list. I don't see any reason why when we break this congestion, we can't see this thing roll back up to 100.
Yeah, well, it's on the move, again, in both Porterhouse and the best stocks in the market list.
I'll tell you what I'm getting interested in. I've been doing research on Uber. I know that some of you dislike Uber. Some of you think that Tesla is going to make Uber irrelevant. I got to tell you, I am highly considering starting a position. Uber is, in my opinion, very undervalued. They are a $143 billion company that is in a bear market, and they are doing $10 billion in free cash flow. Crazy. Maybe it's dead money. But this is a company that is buying back stock, trading at less than 15 times free cash flow. They have $6 billion in cash, $10 billion in debt. I don't know. Joni's right. Uber is a data-rich company, everybody. Data-rich. Yeah. I am interested in what Hood did with agents. I'm going to set up an account at some point for agents. I don't know if it's going to be on Hood or public or what. I do want to have one of those companies trade for me. So we'll see. Hood is decoupling from Bitcoin. Look, I mean, I hope so. You know how I feel about Bitcoin. Striper Kid, thank you. I will look at them. Just give your money to Tanner? I mean, we could. We could give it to Canada. Canada. Yeah, I'm not sure which one's going to be better for agents or not. I have no idea. I think agents are going to be very interesting. Did NVIDIA just move? Hold on. It's up $1. NVIDIA is up $1, everybody. All right, we got tech. $1.63%. This move by Snowflake's incredible. ServiceNow's looking good. These companies are looking good. I don't hate AMD at 520. I really don't. I do not hate AMD at 520. Zeta 20 and a quarter. Love that. Oh, how does everybody feel about Netflix? I should put that on the list. I'm going to link something. Hold on. I'm not going to go through it, but if you're interested, I put out a full article on Seeking Alpha about Netflix. I actually think it's undervalued. If you're interested, give it a read. I went through a lot of research on it. I think that they have a interesting future ahead of them. And at the valuation that it's at, I can get behind it. I can get behind Netflix. I have not added CoreWeave yet. $107.52. I mean, let's look at them. Maybe I will convince myself to buy Core. Oh, hold on. What's this?
That are owned by private equity firms. No one's going to be excited about owning a fleet of autonomous cars, but it takes a long time between now and when we get there. The value is going to be in the app and the relationship with the users. And in my opinion, Uber is laying the groundwork to be one of the most, if not the most important players. I don't know how long it's going to take for people to figure that out.
So Uber is the bet on the super app then? The super app that everyone is chasing.
They have the super app. They're now doing hotel stays.
Sure.
They're working with the airlines. They're doing shopping. They're doing grocery. They're doing delivery. They're literally doing everything. And if you're an Uber One user, not only are you not paying additional fees for all those different services, you're actually getting cash to do other things in the app. It's very Amazon-esque. They have that, and you're not paying a market multiple. You have 17 times forward earnings with 30% plus growth in earnings this year. Maybe they don't hit it, and I'm an idiot, and the stock falls to 50. It could happen.
I'm one of those people you're talking about who doesn't appreciate this story. 2030 sounds like a very long time, but in my opinion, Uber is more a transportation company than a tech company. Right now, they're in the business of moving people and things from point A to point B. I might as well own FedEx or UPS, and I don't like either of those businesses either.
All right, Santoli's next.
Why would you rather be in what? Okay. Sometimes Malcolm annoys the shit out of me. FedEx and UPS have Amazon as a damn competitor. Uber doesn't. Malcolm annoys me sometimes, everybody. Real quick, before I'm going to go through CoreWeave, maybe I'll buy it live. But Uber, all right? Still growing a ton, everybody. Huge profitability. Let's look at the cash flow. Roughly $10 billion of free cash flow. And what are they doing with it? They're repurchasing a ton of shares. I feel like I'm going to have to write a full article on this. Where do the analysts have this? $12.80, $12.89 forward EPS. Forward PE. This is crazy. There is so much growth here. And nobody's expecting them to decline their revenue. Nobody. Tell you, I think Uber is very interesting here. We're going to have to really look into it. But I promise we will look at CoreWeave. We're going to do a full look. Okay? We're going to do a full look, and maybe I buy it, maybe I don't. It has gotten to 187. It is off of its highs. 57 billion market cap. Incredible growth in 2025. Should probably look at it on a quarterly basis. I love that. Nothing not to love there with the revenue growth. I mean, great revenue growth. Good gross profit margins, about 60%, 65%. Now, I don't like that. And I don't like that they lose money. EBITDA growth is doing well. $1 billion EBITDA on. So 50% EBITDA margin. That's bullish. Here's the problem, balance sheet. $2.27 billion cash. $17.3 billion long-term debt, and I believe they're issuing more debt. They're spending so much on CapEx. I mean, we know that's happening. They just issued debt. I would rather them dilute shareholders. What's the dilution look like? They're not really diluting shareholders. I would rather them dilute the hell out of shareholders than take on the debt. All right. So where does the community have it? That's weird. You would think that EPS should increase, not decrease like that in 29. Crazy revenue growth. And if they have a 50% EBITDA margin, that means that they're going to do roughly $6.5-7 billion EBITDA this year, and then $12.5 billion next year. Oh boy. Okay, we have new news from May. I officially have a TipRanks account. Just in case you guys were wondering. Let's see where they have CoreWeave going. I mean, I don't hate that. So the consensus is that we have 23% upside on this. Okay. What about Nibis? It's that, I mean, the consensus is that it's fairly valued. What about Iran? So it looks like CoreWeave has the most potential upside. I have no idea how the rankings work. I couldn't tell you. Where do they have Uber? 48% upside. Look at that. That's pretty interesting. What about good old Salesforce? 34%. Oh, were they saying Ives gave his verdict on Snow and Salesforce? I mean, look, I don't know. I think if you're going to hold these long term, they make sense. You guys want to see service now? We can do service now. $31%. Where do they got SoFi and NVIDIA? Let's see that. Interesting. Oof. Canada would be pretty damn happy. Shit, I'd be happy. Be very happy. Yeah, we could look at Zeta. I got to tell you, I actually really like tip ranks. I'll take that to the bank, everybody. I would take that to the bank. I love how they say human analyst. That's hilarious. It's tip ranks. Oh, yeah. Let's look at Reddit. Big upside. 216.55. Big upside. I got to really play around with this. I wonder where I am on here. I haven't looked at myself in a while. Let's make fun of me. I probably fell off a lot. Oh, I'm number 18. Look at that. Yay, that's me. Yay. 18 financial bloggers, 37 experts. Not bad. Not bad. You know, Tip Ranks makes a great product. Whoa. Is that true? 4.8 just came out. Stop it. Don't tease me like that. Do not tease me. It came out. Oh my God. All right. Here we go. Is this a step up from 4.7? Like, how much better is this? $4.8, it builds on 4.7 with sharper judgment, more honesty about its own progress, and the ability to work independently for longer than its predecessors. Fast mode is available 4.8. I mean, we're going to try it. Obviously, I mean, I use Claude all the time, so we're going to try it. I think this just goes to show you we need more compute. They're not going to stop. We need so much more compute, everybody. We will see what happens. But I wonder how this is impacting everything. Let's see. Snow 240, ARM 348. That would be legit as hell. If we get Mythos, oh boy. Can't wait for that. All right, Oracle 202. SanDisk 1685. Hoodio Hood 8074. Service Meow 10789. Palantir is under 140. AMD 521. Where's Lena at? We know Chels is here. Where's Lena at? Need to say congratulations to Lena. Reddit 16191. SoFi 1680. Zeta 2021. Microsoft 424. IBM 262. CoreWeave is up a little bit. Micron 947. Salesforce 180 or 179. NVIDIA is trying to run a little bit. Maybe Canada is a little happy because it's up, not down. That'd be hilarious if Lena does go buy a Lambo. Then whenever Matt says when Lambo, she can say, I bought one. That'd be hilarious. I think this is a very healthy market. I do think that we are being disrespected with Meta. I mean, look. Meta is trading at 15.8 times forward earnings. I think Meta is so inexpensive here. I don't know. I don't know, everybody. I do think that there are several good investments here. I am very seriously considering. Uber is on the short list. CoreWeave is on the short list. We'll see. Reddit, I'm in. I think Reddit should go up. I'm a fan of Reddit. Ooh, hold on a sec, everybody. Inflection point in semis.
History doesn't imply it will.
Yeah, I mean, you rattled off what sounded like kind of obvious things there, but none of them are. I mean, pre-orders could be pulling demand forward in kind of the memory and chip space. You're saying might get more supply online, might get a China deal that adds to that. U.S. subsidies could bring more capacity on the training, could get more energy efficient. All of those, I think, investors have to keep in mind. So, does that push you towards looking at, say, a Mag 7 software? I mean, where in tech then do you feel like there is the most upside?
Yeah, it's a great question. And one of the things that stands out to me is through the first 100 trading days of this year, semis are up 80% on average. It looks a lot like 95, where the semi index was up 60%. But here's what's interesting. After 95, what happened? The pace of semi outperformance slowed and the rest of the market caught up. I think a very similar dynamic could play out this time around, where in the next couple of years, as the spending inevitably plateaus or even slows, that lifts an overhang for the Mag 7. Secondly, we see more and more Fortune 100 adoption of AI monetization in the earnings guidance. That helps sectors like healthcare, financial, and parts of consumer internet, and even big box retailers. And I think that's really where you actually see more index and diversified upside over the next couple of years.
It's an intriguing idea, and if that's true, can you get name specific, or how would you help people think about the next semi name that might actually be a financial or a consumer name or something like that?
Yeah, so aside from the stock-specific name mentions on this format, what I would highlight is looking at some of the survey work and some of the research our team and equity research has provided. Healthcare, manufacturing, financials, asset management, these are some of the business models that have been fast adopters. And look, we're a long way from 2023. Over the last 3 quarters, vis-a-vis the S&P earnings transcript commentaries, 3 quarters ago, 17% of those index constituents were referencing direct use cases for AI. 2 quarters ago, it was 24%, and last quarter was 35%. So we're seeing that use case specificity go up.
Okay, so we've got maybe improving sentiment on the consumer, not, for the AI reasons you mentioned, maybe the oil relief there as well, healthcare, manufacturing, asset management. Let's then end with the Mag 7 itself. And as you said, if we are going to kind of circle back around in the next couple of years, these mega capex years, and that number's coming down, is that the tailwind you're looking for?
Absolutely, it's part of it. I would argue that relieves the overhang that's existed for the past year or so. Secondly, it's a function of a source of new ideas. So maybe people taking profit on this dramatic semi run, staying within tech, going to parts of Mag 7. It's also a byproduct of seeing the Fortune 100 monetize the use case. So if more banks and consumer business models are actually saying our earnings are going up vis-a-vis AI, that's good for the multiples of Mag 7, which frankly, over the last 3 years have just stayed kind of flattish. Last but not least, Kelly, the biggest growth opportunity will be coming in new things, and it's no doubt space, robotics, autonomous, and quantum. And I'd be remiss if I didn't think those Mag 7 businesses dominate in those areas as well.
Well, earlier this week with the Knicks winning and everything, we were saying, is it like 1999? If you're saying it's like 1995, that's actually maybe even more intriguing. Dan, thanks so much for making the time.
How about this? I may not agree with everything he said, but I think it's more like 1995 rather than 1999, everybody. Let's go. I said it, 1995, not 1999. As Dan Ives would say, I'm going to say it a little differently. We may not have even got to dinner yet. We may be just at the bar having a cocktail. It may be 6:30 p.m. and the party goes till 4 a.m. Just saying. Dougie Dallas is here. Dougie agrees. I do think it's 1995. Yeah, we may not have even got to cocktail hour. We could be pre-gaming this party. Look, we need a lot more chips. We need a lot more compute. We need a lot more energy. We need a lot more of a lot of things, everybody. Get the popcorn ready. And you know what? I may be talking myself into buying something. The hell is this? PSA has paused their service levels. Crazy. Alternative Asset Weekly is coming out very soon. But you know what? We're going to buy something right now. We have convinced ourselves to do it. I'm logging in from my phone. So give me a sec. I am going to put my money where my mouth is. Oh man, don't be a liar anymore. S&P 8,000 once we get a deal. Let's go. Let's go. All right, what account are we going to buy this in? Hold on. Okay. I found the account we're going to buy it in, everyone. We're going to make 2 buys. I am now officially a shareholder of Uber. And wait for it. I am also officially a shareholder of, wait for it. I'm also official shareholder CoreWeave right now. Just bought both of them, CoreWeave and Uber. I have no damn clue what these are going to do. Okay. No idea. Here is where I am at. I think Uber is going to do really well. CoreWeave could go down to $50. I don't know. I'll buy more. I think Tanner's right. I think that the Neo Clouds are going to do well. And I do not believe. Whoa. Hold on a sec, everybody. Dougie Dallas bought Micron. The cyclical bear case is no longer applicable. Dougie Dallas, would you like to come on and give a 5 or 10 minute synopsis on that before we end? 100% up to you. If you want, I can send you a link and you are more than welcome to explain that. You tell me. That's big news because Dougie and I had a very in-depth conversation about this a couple of weeks ago when we went to breakfast. So I am, all right, Dougie, I'm sending you a link. This should be interesting. Holy shit. Doug, I gotta find your email. Hold on. Sometimes I really hate WhatsApp. Oh, this is so annoying. There we go. All right, Dougie, you have a link. I just sent it on WhatsApp. You have a link. Come on down to the Thunderdome and explain why Micron is not a bubble. I happen to agree. We'll see what happens. Ooh, You know what? That's a good question. Apple juice or orange juice? How about I like both? Nothing wrong with apple juice, everybody. Nothing wrong with apple juice. Why is this a top signal? Why? Why is this a top signal? Because I bought CoreWeave and Uber? Uber's undervalued. And how about this? If CoreWeave goes down, I buy more. I don't give a fuck. And there he is.
Uber?
The legend, Dougie Dallas himself. How are you, Dougie?
I'm doing well, sir. How are you today?
You know what? The people want to know, Micron, what made you change your mind?
Because I realized I was wrong.
Okay. What made you realize you were wrong?
The cycle is no longer, a couple of years. The cycle is no longer the cycle that we've been stuck in has been tied to PC upgrades, has been tied to game console upgrade cycles, and those don't apply anymore. What we had, the mental model that we had before was we build things and then we use the tools that we built in compute, right? You had a home computer, you had a work computer, you have maybe a smartphone, a digital camera, some other devices that all need high quality memory, right? But outside of those, you buy those and then it's a couple of years till you need to replace them. And the upgrade cycles could be driven by improvements in software or operating systems. A new device comes on the market and increases demand, but largely those upgrade cycles were tied to consumer products, right?
Yeah.
Well, now we have something called a token. And tokens are consumables. They are created, used, and destroyed. So anything that is making tokens is not going to have a top. It's not going to have a cycle. You may have a new LLM come out. You may have a DeepSeek moment come out that disrupts the hardware and softwares by providing more efficiency. But at no point is someone going to say, nope, we're making enough tokens. We have enough tokens. We've now reached the carrying capacity for what the country is going to use on tokens. It's going to be, no. I still need more, because then I can go faster, I can go cheaper, and I can get better answers than I'm getting now. Because what a general AI is going to provide is the ability to be right all of the time and always make the right decision or the best decision. And essentially the token is the gasoline of, gasoline to the petrochem industry versus making things out of plastics. And we kind of did that backwards in the compute industry. We took sand, we built things that we use and tools, but now we have developed a way to have the consumable that is built, used, and destroyed and needs to be built again. Does that make sense?
Yeah, no, I think you put it very eloquently, and I think you're correct. I think that I could not have put it better. Tokens are the gasoline for AI, and we're going to need an infinite amount of them. They're always going to be created. People are always going to consume them because we are just going to use AI more and more. So what price did you get in at?
I don't remember. It was a market buy yesterday.
Okay. So now, how long, and this is something that nobody knows, your opinion, do you think this CapEx cycle lasts through 2030? And when I say CapEx cycle, I mean with the hyperscalers.
Oh, for sure.
Okay.
Because here's what's going to happen, Steve, is, and you have some of the most expensive AI technology for the consumer that you use, right?
Yep.
How much context do you have there? How much does your AI remember talking to you?
Quite a bit.
So that's just your chat conversations, right?
Yeah, it depends how you use it. If you put everything in projects, it'll remember better. If you just use the standard chatbot, it can go back and search. But if you segment everything with projects and you keep using the project for each individual aspect, it does a pretty good job of keeping track of everything.
Right. Now, let's look 5 years down the road. And you have a podcast like this. And then the next day or later that night, you say, hey, Claude, what was Dougie talking about earlier today? And it knows that. Or I went to a meeting and I met so-and-so. I can't remember their name. What was that person's name? And what did, and what was the color shirt they were wearing? Well, it's got glasses and it has the full context of everything you did now, because it's storing not just text that you've been passing back and forth, but it's storing audio and video in the context window that you are expecting to have a conversation with, right? Because if you and I go out to breakfast, okay, and we have a conversation and we had a little chat with the waiter, the waitress, right?
Yep.
And later, a week later, you can't remember what you got there, but you remember you really liked the restaurant.
By the way, Dougie is talking about a real scenario, and that place, I'm going to tell you, is one of the best breakfasts I've had in a very long time. Place was excellent.
Yeah, it was. It was really good. We went back the next morning.
Did you? Really?
Me, Hollis, and Rango.
Nice.
Yeah. So so in 5 years, we're still going to be adding capability, and it's going to increase the context of your history with this partner that you have now that is remembering things for you and helping you keep track of things that have happened to you, who you met, who you talked to, what was said. These are going to be always on, always recording, always listening. And we are creeped out about that now, but I got news for you. In 20 years, the next generation, they'll have grown up with it. They won't care. And all that storage is going to have to come from somewhere. So give me a 20, 25 year memory boom cycle.
Yeah, I'm in the same camp. I know that I'm not smart enough to know when the CapEx cycle ends. What I do know is Alphabet said that they're going to spend more next year than they did this year. They increased year over year from about 70 to 190 billion. They're going to probably spend 250 next year or more. And if they do, everybody else has to increase. Now, will growth continue to accelerate year over year? Probably not. That does not mean that growth stops year over year. And an acceleration in growth means going from 60 to 70, 70 to 80, 80 to 90% year over year. We could have the growth cut down by 50% and go from 80 to 40%, but that 40% is still 350 billion of additional CapEx between the big four. So I think that memory does very well, and I think semis do very well, and I don't think this party stops. I think that we're going to get a pullback at some point, but I don't think this is the top. Maybe short term, but I think that we do hit S&P 8,000 this year, and I think that the chips as a whole run.
Yeah, the chips keep running because you still need tokens, and the storage keeps running because we're only storing text right now, right? So this is 1995 is an excellent way to look at it, because in 1995 we had email and IRC chat right? We didn't send a lot of pictures because those would take minutes to download. We didn't send music, we didn't send video because those would take hours or days to download. I know the people under 30 can't imagine a world like that.
You and me can.
Yeah. A 20-second video that was like, the size of a postage stamp would take a couple of days to download. So as speed increases, as more tokens get generated and are able to be consumed, we're going to be able to start using other forms of information. And that's going to make the jump from text to image, which we can generate now, but still takes time. It's not instant image generation. Video is not instant, right? And it's still short clips at a time. But that's what it's generating. It's not reading the video, parsing it, and giving you information real time. You can't have a conversation with your AI like you and I would about the breakfast we had, right? But soon you will. And that's going to require massive amounts of storage. So SanDisk, Micron, whoever you want. Heck, find somebody who's just selling sand. They might be the bottom of the picks and shovels play.
So let me ask you this. Micron and SanDisk, one does DRAM, high bandwidth memory. The other one is typically an actual memory company for storage. Do you think one is a more beneficial segment of the chain than the other? Or do you think both segments have to run?
I think there will be smart people that come up with good uses for both, because one is more expensive than the other. So there will be a long-term storage that is useful, that is slower. But what is what's the dividing line? I don't know. Smarter people than I will have to figure out what the load balance is there. But there's no reason for one to run and the other not to. I just selected the one that I think is the high bandwidth, super fast memory, because that's not going away, right?
No, absolutely not.
And then they're going to come out with AI wearables. Those are all going to require super fast memory.
Yeah, when we got DDR3, DDR2 didn't go away. When we got DDR4, 3 didn't go away, and so on and so on. It just slowly got replaced. So, no, high bandwidth is here to stay for a while. You still need to replace so much memory with it.
Yeah. And they're going to use it until it goes away, but the only risk to these models now is that someone invents an entirely new way of storing something that doesn't require the same technology, right? And that may be where the photonics groups come in, and they figure out a way to store things optically rather than magnetically.
Are you playing anything in that segment?
I wish I was. I mean, we have lots of people in our groups that have had positions in those photonics for over a year now. So they're doing very well. I wasn't smart enough to see the vision there.
Yeah, same here. I mean, I'm in so many things I can't do it at the moment, but I am very excited about NVIDIA. I think NVIDIA is going to do very well. There is a question. What do you think tokens means for NVIDIA and their future chips?
How do you mean? What tokens means? As their
token generation. So buying NVIDIA over AMD, do you think everything comes down in the future to token economics?
Yeah, and that's my long-term bull case on Bitcoin as well, but that's a whole other.
Oh, you and I are going to have a dedicated show about that one.
Real quickly, Bitcoin is a wrapper for used energy or generated electricity. So that seems to be the most likely currency that AIs use going back and forth to represent tokens that they're trading back and forth.
Okay. We will see about that. We will see about that one. Is the new currency going to be tokens?
Well, that's essentially what I'm saying. Yeah. That tokens could be a new currency, but Bitcoin is the blockchain that it runs on because Bitcoin represents proof of work and actual energy. Versus a proof of stake model. I know you're a big ETH head, but proof of stake is just like whoever owns more has more voting rights. It doesn't represent actual electricity.
Yeah, I don't look at it from proof of stake versus proof of work. I do it more on whatchamacallit, smart contracts and the building of stable coins and settlement time. I'm looking at it from a different aspect. So that's why I want to have a dedicated show so you can walk through the whole Bitcoin angle with energy with me.
Yep. Be happy to do it. Thanks for having me on, man.
Yeah. And before we go, anything else you're looking at right now?
Yeah, I'm looking at actually something on the private markets right now. I'm doing some reading and due diligence on that. Downloaded some software and a new app to check that out. And otherwise, just enjoying my nice fat monthly dividends.
QQQI and SPYI working well for you?
Yep.
Love them, man. They're two of my favorites.
But of the ones right now, kind of looking at PDI as the lower player because it's, SPYI and QQQI, those are at their 52-week highs. PDI has gotten beaten down pretty good, so that yield may turn out to be better.
I just wrote an article about it. I am a big fan.
PDI?
Yeah, I'm a big fan
Steve,
of
you're a machine. You're a machine, Steve. Steve is the AI. That's when I finally get my whole financial thing put together. I know you have Jarvis, but mine is going to be Steve AI.
Listen, I've been following PDI for a long time. And look, I'm bullish PDI. I think that their multi-credit strategy is getting hit right now because of rates and inflation. And I think that it's going to turn. The distribution is incredible. It's been able to withstand several different economic environments. And I'm not worried about a distribution cut. And at 16%, you're getting paid a healthy premium on capital to withstand this current environment. So it's where I am on it.
Okay. I like it. I'm gonna have to check out your whole thing overall though.
I think you'll like it. Like it. All right, Dougie, thanks for joining. I'm going to set something up for us. We're going to head out. If you're going over to Tanner, spam him with CoreWeave since I just became a shareholder. And I'll be back tomorrow. There will be no episode tonight. Amit and I will be at the studio shooting. So we will see everybody tomorrow. Thank you so much for joining. Really appreciate it. Go follow Dougie. Dougie, what night do you and Austin go on? Wednesdays?
Wednesdays.
Dougie and Austin, two very smart guys, do a show on YouTube at 10 o'clock, I believe, Eastern?
Yeah, 10 Eastern.
10 Eastern on YouTube. Please watch them. They are super smart. It's well worth watching. All right, everybody. See everyone later. Thank you very much.